Worried about 40-year high inflation? Here are 3 ways to hedge against inflation. You don't have to look far to see how inflation is eroding our quality of life. That same sack of groceries you bought last year probably costs 10% more today. The Fed has made super-sized interest rate hikes in response, but it remains to be seen whether that will be enough to tame runaway inflation. These moves have already cast a giant shadow over the stock market. The good news? These days, investors have plenty of accessible ways to fight inflation. Real estate. Real estate is a well-known hedge against inflation. As the price of raw materials and labor goes up, new properties are more expensive to build. And that drives up the price of existing real estate. Well-chosen properties can provide more than just price appreciation. Investors also get to earn a steady stream of rental income. But while we all like the idea of collecting passive income, being a landlord does come with its hassles. These days, however, you have a variety of options to invest in real estate without becoming a landlord. Commercial real estate is another great way to diversify your portfolio, but it's an asset class with a high barrier of entry compared to residential real estate. Gold. Investing in gold is often considered the go-to inflation-fighting move. It can't be printed out of thin air like fiat money, and its value is largely unaffected by economic events around the world. And because of the precious metal's safe haven status, investors often rush toward it in times of crisis, making it an effective hedge. These days, you don't even have to go to a bullion shop to buy precious metals. There are plenty of online platforms that offer a wide selection of gold and silver bars and coins, and fair pricing. Artwork. You might think that investing in fine art by the likes of Banksy and Andy Warhol is only an option for the ultra-rich. But with an investing platform called Masterworks, you can invest in iconic artworks too, just like Jeff Bezos and Peggy Guggenheim. On average, contemporary artworks appreciate in value by 14% per year, which is significantly higher than the average returns of 9.5% you'd see with the S&P 500. And investing with Masterworks lets you bypass a lot of the drawbacks of art investing. You won't need to scour garage sales looking for a lost work by a master, and you won't have to scramble to find a buyer if you need to sell your shares fast.